Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. World on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got its path. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Hey, it's Options Expiration Friday. I don't know. There's not a whole lot of news today, but the treasuries are moving up, kind of like they've been doing the past few days. Starts out on the open up, although yesterday that kind of fizzled out. So maybe we'll take some trades, but I'm thinking we might just be like chill and complain about Joe Biden or something like that. So coming over here to the charts, you can see that, yeah, there was a bit of a bid yesterday in the treasury, but it came back and now we're a little bit lower, but they're trying to recover that now here at the beginning of this session. In the S&P 500, after having such a big down day the day before, I don't like double bottom down there, kind of down at 38.56 or so. But we'll see what they do today. Options might move on the options day, right? Oil's still marching higher. Congress trying to pass a price, they call it a price gouging law. Didn't pass, of course. Natural gas actually coming off here this morning. Okay. Gold and silver doing okay. I don't know. I could see gold and silver coming back at least to 1900 and then maybe not looking so shabby, you know? Could happen. And then we got copper. Copper is on the upturn. So maybe things in China not so bad anymore. Maybe that's actually starting to ease. Well, and then you got Bitcoin. Bitcoin just kind of when we had that big down day yesterday, like Bitcoin did move down, but not wasn't nearly as crazy as the 12th, and holding 30,000 now. And Bitcoin and the dollar a little bit weaker here this morning, which is good because the dollar was really frankly too high. Okay, so now I can see here on the 10-year there is a big old fat order sitting on it there. And it looks like they're going to push up further, but I don't know if I really want to be involved with it in that case. I was thinking I was going to come back, and if they were at 285, take it, but no, not so sure. We have EU consumer confidence at 10. Oh, really? Oh yeah, I do have that on my calendar. That's not a piece of news that I typically follow, but I think that you're right. In this situation, there's not much else going on. We should pay attention to it. One man received Japanese town's COVID stimulus by mistake. Wow. And gambled it away. Wow. Whoa. What is this? Somebody in the middle of the night posting I'm gonna have to ban him. Yeah. I have to ban him. Is this consolidation day after chop? It may be. I don't know. So I'm just like hearing as far as the treasuries go, it sure does look to me like they are trying to move back into yesterday's prices. But I'm also wondering, it's kind of been doing this every day. He had posted it was like a affiliate code for some combine that I had never heard of before. I'm okay with people coming in and post like if Top Step came in, if Michael Patak came into our Discord and posted a code to use that gave you a discount off of a Top Step Trader Combine, I would probably allow it as long as he made clear who he was affiliated with. But like when somebody that I've never heard of before, never has participated, comes in and posts crap, I just bye. Except for other rooms. That's the other one. Is if you come in and you're messaging people or posting about other rooms, that's an automatic ban. I've had some people complain like, you're not being fair because you won't let us promote. And it's like, because you're trying to promote another room. Why would I let a competitor directly market on my Discord? Like, what the? No. Keep in mind, with Discord, it's not my Discord, but isn't that like promoting other content creators in YouTube? You can watch both. No, well, if you come in, listen, if you come in on Discord and you promoted other yourself as a content creator, that's okay too, as long as you're participating. Like if Alligator comes in and he posts, he can post pretty much any video that he wants, and I'd be totally down with it because he's participated more than anybody else in the Discord, right? It's when people try and treat the Discord as I can just come in and spam it whenever I want and never contribute anything else that I won't put up with, right? Like keep in mind, it's not my Discord per se, right? I am like the sole moderator and curator of it, but I really think of it as like the futures trading community's Discord. So I want to be like, I do want to try and give, let people use it for promotion purposes, because then it's like, I really hate this thing on Reddit where it's like you can't ever post your own stuff, and they do that on some of these subs. Most of these trading subs, like you can't post your own stuff. And so it's like content creators have no incentive to interact with the community or participate, right? So I don't want to create that, but you can't use it for spam. Like if you're going to come in and you're going to participate with the community, then you've got to participate. You can't just spam, right? Yeah, he is still around. He will he disappears during the summer, but he always comes back. And yeah, he's been here the whole 5 years, hasn't he? Well, I mean, frankly, Lucas, you're old school at this point, man. I think you were one of the. I mean, Uzi is the oldest. By the way, we haven't seen Uzi in a week or two now. He last we heard from him, he was like working on his office. I'm kind of wondering if like the office rebuild ended up getting more serious or something. Oh, he's there. What have you been doing, Uzi? Where have you been? You died. I would hope, dude. If it like, yeah, like seriously, Uzi is almost like single-handedly responsible for the YouTube chat being a thing. Because when we started, I was, the Discord was already a thing, and so I kind of just like ignored YouTube chat and never tried to like curate it or anything, and was talking with people on Discord. And then Uzi comes along and he just starts chatting with me on YouTube, and that made it take. Oh, you all got sick. Oh, you know what? We've been sick over at my house too. I haven't caught it. I don't think I will, but all of the kids have been having like some sort of. They've been staying home from school. It's been bad enough. No COVID, but some nasty bug going around. Oh, see, I was going to say that I thought that there must have been one of your home renovations started getting more serious than had to keep the office torn down for a site. Oh, I'm glad that you're here because I want to tell you this story about something. Wait, let me eat my email and then I'll tell you my predicament, and you can tell me what you think about this thing that I've done. You know what's been a funny thing to watch is Linus Tech Tips. There's I think that at this point Linus is probably my favorite YouTuber. It's kind of funny because when I have this thing all the time where like I'll like things at the beginning or I won't like things at the beginning and then those things end up being like my favorite. I guess it's just exposure. But anyways, he's been moving into a new house and they tried to make it like all smart house and everything. And I know it's kind of funny to watch the videos where they're like trying to move into it and get it ready and everything. Because like the painters keep getting the paint wrong and they're like super like they know exactly what color paint they want and all they're like so specific and they're holding the uh what do we call the housing project manager's feet to the fire on like every tiny detail, and it's just really funny to watch. Because like I've been through that moving in a house. Like I know exactly like what they're going through, and it can be kind of stressful for when you're moving in, because you want the house to be perfect. No, you got roped into the Johnny Depp trial. Dude, legal analysis is fun. I should have been a lawyer. I think I don't know. No, probably not. I think that my skill set is better suited to computer programming, but I do enjoy law. I do enjoy like if I was gonna go back to school, I want to go back to school and get like a master's in like financial analytics or something like that. But it would also be nice to go back to law school. Okay, so that big order disappeared. I was kind of suspicious of it as soon as it showed up. I was like, I don't like these have been kind of trying to push this up and then it turns. So I don't know if I really like that a large order is already showing up trying to nudge it. And of course it ends up being a nothing. I loved it when he was asking about drinking a mega pint of wine. What? I didn't hear that part. Hey, good morning, Nicholas. Welcome back. I'm eating. Focus, Seth. Focus. Carl Quintilla posting a chart here. It is now the sixth worst non-recessionary S&P decline since World War II, according to Deutsche Bank. Okay, so I am seeing this flight to safety bid in the treasuries now again today. The S&P 500 just dropped about 4 or 5 points there, and the treasuries start bidding up. So it's really interesting to me how quickly this inverse correlation has come in, and the inverse correlation with the S&P 500 is probably the strongest I've ever seen it, which is a little annoying to me because if I wanted to trade the S&P, I would just trade the S&P. Okay, I got the food down here. My mouth is a little dry. Okay, so here's what I did, Uzi. This is I don't know. It's not funny. It's not a funny story. I don't know. Maybe it's a funny story. But here, so I got this table, right? And it's like it's from IKEA, and it's like a honeycomb board. Like, it's really thick. And the reason it's able to be so thick is that the inside of it is like this honeycomb pattern, right? Is where its strength comes from. And, you know, all the sides are just basically like veneer wood. So really long desk, which is good because I've got like my production keyboard over here and my production DJ thing over here, and there's not enough room on the table for all the stuff. I don't know. Maybe if I made another desk that was like one that was just for trading, and then on the opposite side of the room, I had one that was just for producing, it would be, you know, that would be a better setup. But I got this thing with these parts, right? So I want to mount things to the desk. I've got a bunch of these mounts for the camera, the microphone, the light, but I want to have one for my producing speakers. I've been producing a lot lately, and I would really like to make better use of my speakers, but they're covered up by the monitors, so you don't get the full effect, right? So I want to be able to like screw in these stands into it that I can put the monitors on, and then have a setup that really can move the monitors like really far out so that the speakers are exposed, right? So to do that, I need a different desk that is solid wood, right? So I just kind of been keeping an eye out, and I see something show up on the local classified ads and decide to go for it. And it's a live edge piece of cherry, right? And it said that it was like 3/4 inch thick piece of cherry, same length as this table, much wider than needed. So I'm like, well, I don't really want the live edge, but you know, I can always just cut that off and refinish it, or maybe I end up doing something else with it, right? So I go down there, and at first the thing is that they said that it was over here in Davis County. It was not. Oh, they're continuing up again, huh? It was not in Davis County. It was downtown, in like this office building. And they were all set up in the bottom of this office building where their parking garage was, and they had a ton of office equipment in that garage. So I assume that some company went out of business and they're selling all the stuff. I'll blow my nose here. Okay, so they're in the parking lot. They had the piece of wood. Okay. I don't know what they had it attached to before, but they just had it there on the ground. And I go and I look at it, and they only wanted $250. They wanted $250. I'm like, $250 for a piece of cherry? Because that's, I mean, you're not going to buy it that cheap. I tell you that much. You're not going to go and buy a piece of wood that cheap. No way. Okay. Here's the thing. It was not 3/4 inch thick. It was 2 inches thick. It was so effing heavy. Like I think that there was like 6 big guys, and we picked it up and put it into the truck. Okay. My dad is like, oh, let's just move it. I'm like, I don't think that just you and I can move it. It's too big. It's heavy. It's heavy. And I don't think that if I put it on these legs that it would work. I don't think that these legs are sturdy enough, because the piece of wood is just so insanely heavy. Oh, it's so insanely heavy, guys. So now I don't know what to do with it. Like, I don't think that I can turn that piece of wood into a desk. So I think what we're going to do is we'll finish it with something else. Maybe we'll turn it into a a dinner table or a conference table or something like that and resell it for a few thousand or something. Because that piece of wood's got to be worth more than $250. Like, you can't buy something that heavy and it only be $250, right? So that one, build the legs out of 4x4s. Yeah. Well, these are, what are these? These are like metal. They're metal feet. They're just, yeah, I don't know. This desk is kind of wobbly. That was one of the things that always bothered me about it, was that I guess in order for it to not be wobbly, I would need the legs to be like angled out, wouldn't I? I don't know. Maybe I need to build like one of them producering tables, because it would be nice to have, like, here in front of me, I've got enough space underneath of the monitor that I could probably put like 2 shelves worth of stuff, right? And then if I just get a different kind of monitor arm, this monitor arm would be a little bit, it's a little bulky. I could get rid of that and replace it with 3 separate monitor arms and have the two on the sides just be like mounted like way further out, and that would allow me to move the monitor way further out to where I want it to. Do you think ES will break 4,000? Well, I think, Khalid, that there is a pretty good chance that the S&P 500 will get pinned at 4,000 and move towards that, because that's the area of like the most options interest. So like the market makers make the most, I think, if it ends at 4,000. But there's also a scenario where they just have another monster sell-off today. Like they just try and push it as far as they can on the options expiration day. And then maybe next week we get a reprieve. The Futures Trader 71 not doing his trader bite today, huh? I don't know. It's hard to know what the S&P 500 is going to do here. It seems that the S&P 500 is headed down. And my noses are running a little bit, or I don't know. I got some gunk in there and it hasn't come out, and I feel like I'm talking like this. You're expecting a move to the upside in ES? Yeah, can you see how, like, I could totally see it going both ways, really. And I'm really, even though it looks like we could have made $20 here if we had gotten that 285 here, but I'm not so sure about like taking a spot. Like, I think the issue that I have right now is that I'm not seeing necessarily. Well, actually, I think that the evidence does support that there's a large beta order by the treasuries, but it also looks like it is more that the S&P 500 might be a more significant driver. And the problem is that I feel like, yeah, the treasuries should move up, but I don't know about the ES, what the ES is really going to do. Okay, so there was a big order there in the treasury and it disappeared. But they're maybe kind of saying they still want it to move up. I don't know. You could cut the board into individual. That's not a bad idea, Brad. You could probably make a lot of money by reselling the individual pieces, because you can sell an individual butcher block for a few hundred, can't you? I forgot to take my allergy medication yesterday, and that's why I'm kind of a little snotty today. The last tweet that I see on my squawks was Forex Live retweeting Open Outcrier, pointing out that the Tesla losses top spot because of losses, Tesla's top spot in Kathy Wood's flagship fund has declined, and now Roku is the top one. The way that they said that didn't make sense. Tesla is no longer Kathy Wood's largest holding, Roku is. And Forex Live says the pinnacle of disruptive innovation is a box that lets you choose between Netflix and Prime, right? It really is. So the Roku stock is such an interesting one because Roku started out as a recording thing. Like it used to be one of those things you'd connect it to your cable box and it would record TV shows. So like you could watch one show and the other one would be recording and you would never miss an episode. And that was really great like 10 years ago. Right. And they had the best box. And it was a subscriptions box. But then everybody moved over to streaming. And so they just made another streaming box. But the stock itself has actually done pretty okay somehow. I don't know. They kind of are. I'm getting these hints that like we could just keep going. I guess there's 120. Like this is a lot like yesterday where it's like pretty good trend, but 120 might be an area where they might kind of chill. And yesterday they just kept going and they made it all the way up to like what 12 or something. Although that's a little bit steeper of a pullback than some of the others. We'll see how this one turns out. I'm still kind of a little hesitant. Like, I don't know, something that I'm trying to get myself used to and that I've been focusing on and thinking is that I really need to pick my trades well. Now, I think that in some cases I've gone a little bit too hard. I've not just been picking my trades well, but I've really been insisting on getting the perfect price. And on some of these moves, it wouldn't have mattered. Sometimes asking for perfection is the wrong. I mean, especially in tradings, markets are messy. I shouldn't be asking for perfection. So I've been too picky on some of these this week. But I don't know if this is even a move that I want to participate in. I'm a little bit concerned about the possibility for some volatility, like that a rally could come here in the S&P and it could drop the treasuries real quick. Technician who called the 2020 market bottom says nobody cares. No. If you want me to listen to somebody, you've got to give me something more than just they made a good call in the past. Oh, that's cool. I didn't know that the Bloomberg terminal will give you a 3D chart now. That's so cool looking. I want a 3D chart of like the bonds. That must be the options. Yeah, Delta contract. That's super cool. So I have another thing I want to talk about. Like I had an idea last night. Like, but I'm wondering. I kind of want to perfect. I don't know if I want to give my idea up actually, but I'm thinking I want to make an app that's like gamification. So I think I need to do some investigation of the best gamification applications. Right? So like, there's all these so like Duolingo is the one that I'm most familiar with, right? If you go and you do the Duolingo thing every day, you get these streaks and they give you rewards and stuff for doing the streaks, right? Um, I'm kind of looking for things like that because I'm thinking maybe we could apply gamification to investing. Like, it really bothers me that Robinhood kind of gamified stock trading. Like, they really wanted to try and convince people to trade stocks. And really, what they should be doing is they should be gamifying investing. Like, the thing is that if people really knew how valuable investing was, they would do it more, you know. But the regular person says, I would rather have that iPhone or whatever the deal is, right? And they don't put the money away and generate assets with it. And the problem is because when you invest, you don't see the gains right away. Like, even if it's going up, you don't see it, you don't think about it. So what if you gamified it? What if you put it into an app and, you know, you had a streak for investing in your IRA every month, and it would reward you for like learning about the market. It would like teach you about the market, or give you key pieces of analysis about the current economy, and it would reward you for like reading them and stuff. I don't know what else you could do, but basically get more people into investing and doing it right, and we could gamify it. Because I'm thinking about that, and I'm like, oh, well, I can make an app like that. I could make a web app like that. I have the skills to do that sort of a thing. I just need to get down like what is the right kind of gamification. You know what I mean? Especially like, how do you gamify something that like you only do once a month? You know what I mean? I don't know about that one. That's my tough question. I don't know. So has there been any apps that you've used that use gamification? When I was younger, my friend would play a game of imaginary portfolios to see who does the best every week / month, and make a game where the winner gets a free share. Well, I do think that there are sims. It's been a long time, but there are like simulators out there, right? I think that when I see stock trading contests out there, oh, yeah, you know what, Mark, that was a really good comment, because now I'm thinking about it. It's like there's a problem with the simulators out there, because like what it really should be is like, okay, you construct a portfolio at the beginning of the year, and then we'll see whose portfolio does the best, right? And the problem is that somebody always will just YOLO into something stupid, right? And there'll be like, you'll utilize certain ETFs, and there's all sorts of little crazy things that you can do, right? But what if it could only be S&P 500 companies, for instance, right? You can only pick 5 stocks, and they all have to be S&P 500 stocks, right? And that was the contest, something like that. You know what I mean? That would be like a much better stock game. But the problem is that I don't think that teaching people to manage an individual portfolio is really the goal here. Like, the reality is that most people shouldn't be managing a portfolio of individual stocks. Okay. It's a lot of work. It's a lot of work and a lot of things to know, and there's risk to it, and you might not make as much as the S&P 500. For your retirement accounts, it's probably not appropriate unless you already have your retirement accounts like squared away, right? I'm more about like there's so many people that apparently they aren't doing their 401k matches, and they're not contributing to an IRA. That's the goal here, is to get more people to do that. I have this one friend, and they've become an influencer on Instagram, trying to teach people investing stuff, and they sell a course. And I'm just like, you have to sell a course to teach people what an index fund is, and how to, that you actually have to pick an allocation in your IRA. Because I guess one of the common mistakes for people is they'll put money into their IRA account or whatever, but they don't pick an allocation, so the money just sits there in cash. Or I guess it can even happen with your 401k. Although I think most of the time your 401k will default to a target date fund. So they were coming down a little bit. It's doing this thing again where it's like any time that I think maybe it's going to come down to a more advantageous price, it swings back the other way. Now, there has been a little bit of a recovery here in the S&P. They've recovered about half of their losses from this down move. So 10 points down, 5 points back. But the Treasury didn't really react to that. So this does kind of make me think here again, there is a large meta order. But again, like every day this week, it seems like there's been a large meta order buying starting at about 8 o'clock Eastern time and just kind of continuing through. But yesterday, it was it around about this time or was it more like 8 o'clock? I don't recall now. But, it reversed that whole move eventually. Like another meta order came in the opposite direction. So I'm 2.5, like based on the range, if we thought there was going to be another move up, 2.5 is not bad. Well, maybe just to make myself feel better, I should take one on sim here. I'll take one on sim. Do you actually trade the yields or just watch them as you trade bonds? No, I'm taking trades in the 10-year over here. I don't really like the way they're set up there though. I got to tell you, when the spread is like 5 or more ticks, no thanks. In this volatility, you can't. Doesn't work. And it's really frustrating because like let's say that here in the 10-year, I wanted to buy 2.83. So I put a limit bid right there, 2.83. Okay. On that one, it would tick down. I would probably still be just like the only person in line. And like what I often find happens is like, okay, they finally decide to hit into you. And then all of a sudden 2.83 is offered and 2.825 is bid. So it's like automatically right off the bat, you're down 5 ticks, right? Like if you're getting it on the limit, you really have to be doing it in a spot where like they really shouldn't be trading it, I kind of got a dumb question. So I have a Roth IRA. If I open a standard 401k through my company and contribute the same amount, can the deductions write off the contributions? So it doesn't exactly work like that. So when you contribute to a 401k, that is pre-tax. The reason that you do the 401k is because your company will match it, right? So you and when you contribute to a Roth IRA, you pay taxes on the contributions before you put them in, so that when you pull them out, you don't have to pay taxes on them, is what it does. So there's not like a write-off or anything like that. Something you can do, though, is you come in and you lose $1,000 trading futures, and then you get to mark those off on your taxes and take $1,000 off on your taxes, which, depending on how your taxes are set up, it wasn't the case for me like this last year. I actually made money on my stock trades last year, but the year before that, the being able to that $1,000 basically put me over the top to itemize things, and then I was able to itemize a lot more stuff, and so I saved quite a bit on taxes because of it. Elon is live now? What do you mean by live now? Like on Twitter or something? I don't see anything from him. Where did he go live? Yeah, makes sense. But really, I would say the first thing is always max out your employer's 401k contribution match. because that's free money, man. You know, it's like, what, you don't want free money? You got it. So you gotta at least do that. Then start contributing to your IRA, right? And I think that most people, they never start contributing to their IRA. I know that was me for a while, but I started doing that. It's a good thing. And your IRA is a lot more flexible. You can use it to pay for medical expenses. You can use it to pay for school costs. So Roth IRA is a really useful type of account. And if you go in and you put $100 or so in there every month, adds up. Oh, you're in a good spot, Mark. They'll match up to 6%. Oh, they won't let you open up until you're 21. No, is that really the case? Because I'm pretty sure. Oh, maybe you're right. Because I guess maybe I was 21 when I had my first 401k. I could be wrong, but I think I was 21. Yeah. But I tell you what, man, if you're doing matching 6% from the very beginning, even when you're not making very much, makes so much of a difference, right? Like, I started contributing to my 401k from the very beginning, and my wife did as well. And so we're pretty much on track that just with our 401k, we will meet what we need for retirement. That is, assuming like an average 7% return on the investments and all of that, right? So the thing that kind of was the impetus to get me to start putting some into the IRA was that I wanted to be able to pay for the kids' school. But I don't know. Like, it's kind of funny because I was thinking like, okay, like my eldest, he is going to be probably going to school here in like 4 years and this, that, and the other. So we need to start saving up for him. But like this year in school, it's not gone well. And I don't know what to do about it. He's has not been doing the work and hasn't been getting very good grades. And if that continues, and I think you can get away with it in junior high, but if that continues onto his high school transcript, then it's going to be hard to get into a good school, Kathy also in this call, I don't worry why she gets so much attention. She is the worst. Well, it's an interesting thing, Tobias, right? Because it really was like the perfect storm, right? She ended up being the best performing fund 1 year simply because of Tesla, right? So she ended up being the star at just the perfect time when there was an investing bubble of sorts. I think here, if I'm going to do this, I should do 2 contracts and take one off over there. Okay. She just kind of became the popular one at just the right time. And then on top of that, she is a fund manager who does a lot of social media outreach stuff. Like, she has a YouTube channel and stuff. So they were out there on TikTok posting clips of her talking and stuff like that. It's I get what you're saying, because I think she's crazy, to be frank with you. I really think that, it's not like she manages a fund, okay? I don't manage a fund, okay? So we can't say that she's a complete idiot, okay? But there are very clearly some things about the market and managing a large fund that she doesn't seem to understand. And like the what has basically happened is like an innovation fund could work and make sense when it's small, but not when it gets big. Not when it's the biggest fund, right? It can't be the biggest fund. The biggest fund go out and invest in tiny companies. It's not going to work. You're going to have too much impact. And that's what's been happening with her. And then the thing and then I think that on top of all of that, she kind of inadvertently created her own bubble, because then they got so many people contributing to their fund. They're going out and buying all of these companies. And because they're buying these small companies and putting more and more money into them, of course they go up, right? So then her performance looks even better. And but as soon as the market starts turning down, the whole thing unwinds, and then you have the same impact working against you when you have to sell, right? So like a lot of that success that they were having was really just their execution impact. They didn't realize it, right? Education in the US is overpriced. I'd rather buy real estate and rent it to pay for my kids. Well, it depends on what they go into. Like here's the thing is that this kid was talking about being a doctor at one point. He was talking about being a doctor. I'm like, oh, I'm going to have to pay for medical school? Okay, well, please be an anesthesiologist. Actually, he was talking about cancer. But I don't know if that really matters anymore. I think that something that has happened is he cares more about what is happening now in his life and with his friend group than he does about, doing the best at school, getting into a big college and becoming a doctor or whatever the deal is, right? And I'm kind of looking at this like, I mean, is his choice. I can't force him to like do the homework and stuff, but what do I do? I don't know. And I think that one of the problems was that like he kind of hid his friends from us. So we didn't really know what was going on. And I wouldn't have known what was going on unless I was like stalking him. He's 14. I'm getting like way too personal. I'm sorry, but the point is, I want to save up a lot of money for school. I don't know if he's going to use it. I'm sure he's going to go to school, but I don't think that he's going to try and go and be a doctor. I think that it would be more like, you go to a community college or something. What bothers me is that she still says illusionary things. I mean, is it okay to be wrong, but don't advertise crazy expectations, which are not. Well, yeah. Well, I really kind of wonder if there's not a case for them to make to the FTC that she's, false advertising. You know what I mean? Because it really is like she's coming in and saying like, oh, we're going to make like 50% year over year. No, you're not. No, you're not. like it's not just that if you accomplished that, you would be the greatest investor of all time. We would have to completely rethink everything that we know about markets if you pulled that off. Yeah. It's one of the problems that I have with kids these days is that like both me and my wife's experience in school was very different, the kids kind of deal with a lot of different issues, like it's really crazy to me that like the big issue in schools is like gender identity issues. I'm like I'm not trying to denigrate the people that identify as that or that experience problems because of that. I'm just saying that it's not healthy for kids for that to be shoved in your face all the time, And when I was in school, in junior high, I didn't really talk to anybody, to be honest. I mostly kept to myself in junior high. In high school, I kind of developed more solid friends, and they were computer geeks like me. Okay, right? So our common interest was something that was led to my success later in life, right? My wife, she was homeschooled, so she doesn't know anything about the social stuff in school and everything, right? So you got that going on. His social experience is going to be completely different from mine, and so I don't really have any experience to draw upon to be like, well, okay, here's what you got to do in these situations, but yada yada yada, right? Okay, so you got that whole thing, and then all of a sudden he gets really involved with these friends, and school performance drops. So what am I supposed to think, right? Is it the friends or something else going on, right? And there's like no way for me to know because like everything's been hidden from me. And not to mention that they're not here at this house half of the time, so I don't know what's going on at the other house too. Of course, I can talk to the other house, and I will have to do that, figure out what's going on. But man, please don't. Oh, please don't get into that sort of. I'm just. The only point of that is the challenges for the kids are different, right? Like, I think it would be wrong of me to say, if you come in and you make this decision in your life that's like objectively bad. I don't know if I have data to support that. I do have data to support that who you hang out with has a large impact on how well you do in life, how much money you end up making, or whatever the deal is, right? That's definitely a thing. If you hang out with a bunch of deadbeats, I don't know if his friends are deadbeats or what the deal is. They're probably just into anime. It's probably is. I don't think that anime should be like anti-scholastic, so maybe it is something else. Maybe it's just chemicals and motivation. Maybe I just need to force him to pick up running to get the endorphins going, or maybe. Can you choose some financial subjects in school in the US? Not really. No, I kind of have to teach my kids all that stuff on our own. Like this is another thing that I really struggle with, Tobias, and this is much more relevant to like what I'm doing here, is that at this point, most of this stuff is second nature to me. Like that you should match your employer's 401k contribution, that you should max out your employer 401k contribution. That's just like no duh. Like, it is so shocking to me that there are some people that don't know this, that they never thought about that they don't realize how much they're giving up by not contributing to their 401k. It's like really insane, and it's like a really huge swath of millennials too. Oh man, this trade just like is about the worst that it could go. Aren't I glad that I just took it on a sim account? This is like almost exactly what happened yesterday. Except for that yesterday, when it got back to this point, there was a little bit of upside, and then it kind of went dead and choppy and frustrating. So now I really should be worried about touching it, yeah? Anyways, yeah, and I've learned a lot about finance. I think the thing that we got here on this channel that's special and unique, and if you're new here, here's the thing that we know, and the thing that we know is, I think, really like the key to trading. Like people always say there a holy grail. There's not a holy grail. There's not some secret. Actually, there is some secret. The secret is not the holy grail, though. Like the secret kind of tells you that what we're trying to do is really, really hard. Okay. But the secret is that markets are not informationally efficient. The current price does not reflect all available fundamental information about that asset. The price is mostly a reflection of people buying and selling it. The orders that actually come through, that is what is the primary driver of price. And people that are trading or are placing orders in there based on the fundamental value are a small, almost trivial portion of the market. So the current price is not informationally efficient. But the market is very statistically efficient. Like any kind of pattern that you think you see with when a moving average crosses, or uh, candlestick pattern, or whatever, the higher high, higher lows that you think you see, the market and the robots are able to eliminate those edges very, very quickly, right? So you get a market that is very statistically efficient, but not very informationally efficient. That's the secret. Okay. So that kind of, I think, explains to some extent why so many retail traders have trouble, because so many retail traders are told just ignore what's going on. Don't do the information. And see, I lost one or two that didn't believe it. They're not believers, but I'm telling you, like, I'm not just making this stuff up. It's like all empirical. All of the quantitative finance research that we've had over the past like 10 years, that's what this is culminated in, right? And I think that the institutions always kind of knew this in their hearts, that this is the way that the markets were, right? That's the big thing that we know. And when you know that, I think it really changes your perspective. It not just changes the way that you trade, but I think it changes the way that you look at the market as a whole. Because now all of a sudden, like, what you do matters, actually. Every order matters. And what you invest in matters. I really like Bitcoin, man. I have to admit, like, the Bitcoin hate inside of me has really started to brew. Because I remember at the beginning of this, I was like, well, I don't necessarily believe in Bitcoin in the long run, but I think I could make some money trading off of it in the short term, right? I no longer believe that. Not that I don't believe that I could potentially make some money from it, but I want to put my money into things that help people. I want to do things that are productive assets and generate revenue and generate products and services that are good for society. And I think that Bitcoin at this point is just a giant waste of energy, you know? And I get that because I understand now that the market is not informationally efficient. Context is important. We are fighting a strong sell trend in treasuries. I think we need to be quick to get out on the long side because it's fighting that gravity to higher yields. Well, it looks to me like we got a similar thing to what happened yesterday, where there was a really large meta order buy that came through, and somebody decided to take advantage of that to spike price back down. So now that that move has already happened, if we knew that that meta order to sell was going to come in, and of course I had nothing that would tell me that it would, then where I was trying to buy it was, of course, the place that you should have taken it, right? Now that it's run, I don't necessarily want to be touching it, because you could it could just as easily fight back to here. But another option is that it could just chop, right? It could do the thing where no matter where you get in, it defies you, right? So I think that caution is warranted. I think that I really need some signs. Now, the S&P 500 hasn't opened up yet. So the S&P 500 opening up and how markets shake out after that could provide us another opportunity. So I'm not going to completely give up on it. What I like in cryptos is the transparency in the order flow. I mean, the connect to the WebSocket. Yeah, that is super great. No, I totally agree. I think that something that Bitcoin has shown is that the financial industry has kind of been dragging its feet on a few things, because entrenched players don't have any incentive to change it. And there are, to some extent, certain market forces that have become so entrenched that it's hard to move them. Like, there's plenty of competition in like the bank space and everything, but the execution is not really. All of the people that are doing this, they're all kind of doing it the same way, and so they don't want to change it. But like in stocks, they're moving towards it, so it's not like there's not progress. But why don't we have this same full level 2 data for all stocks, and why isn't it largely largely available? Like, you can get it, but it's hard to find. You have to pay for it, and it's not cheap. But on the same token, kind of makes me wonder why the data for the CME is so much. Like, I know that it costs something and I'm okay paying for it, but it seems to me like it shouldn't cost as much as they're, for them to make it as they're charging, I thought we were starting to get to the point where that kind of data was trivial to give to people, but apparently not. A central bank digital currency, there's some cool things about it. I think there are some things that they've done with cryptocurrencies that you can do with a digital. It doesn't have to be crypto, but it could be a centralized coin. But you can do with a digital currency that we haven't been doing. And I think that having like a ledger that everybody can read is really, really cool. That's not the way that Visa and MasterCard work, right? But it's like $30 to $50 per month. For when you're trading micros, $1 at a time, it's expensive. Yeah, there they went again. That move was only just a tiny extension of it, but that's kind of a move off of the open here, and maybe because the S&P 500 is turning up here at the moment, the first impulse down. The first impulse off the open was a down, and now they're turning up. So why do you guys people keep saying level 3? That's not a thing. What are you calling level 3? Are you guys calling market by order level 3 or something? Level 3 typically refers to aggregate market depth across exchanges in stock market data, right? That's what level 3 typically corresponds to. Unless you just, accidentally meant to say level 2 and you accidentally put level 3. But that's not the first time I've heard people saying that lately. So I'm like, what is it they think level 3 is here exactly? I don't like calling it level 2, like calling what we're getting here level 2. I mean, it does get called that, but I think that you should use the term market depth. You get full market depth. With Rhythmic, you get full market depth at all prices, as compared to CQG only gives you the inside 10, 20, or whatever it is. Yeah, I really like that. Getting all of the prices. Okay, well, they did extend price there pretty hard, but look, it's all the way back to the other side of the range. Well, here is where, yeah, if you do want to go short, not a bad spot. If the S&P 500 decides to run on an upside campaign, they could push the treasuries down a lot. But with the way that it's been playing out so far, I'm not so sure that that's what's going to happen. I think that at this point, it's more likely that we get either chopped for a while and then maybe an upside, or that they sell this. Yeah. See, the reason why I don't like the term level 2 is because in stocks, when they think about level 2, they're not thinking about the market depth. They're thinking about what is the best bid ask from all of the top prime brokers, which is a very different thing, right? When you're looking at level 2 in stocks. So if you go on YouTube and you search for level 2 trading, you're going to get all these videos about level 2 in stocks, which is completely different and is not even a thing in futures, right? That's why I think it's better to use the term depth of market. The DOM. Okay, well, they're extending out of this a little bit higher than I anticipated. it does look like the reason that they're turning up is because stocks are starting to turn a little bit bearish. So we still have really, really extreme correlation with the S&P 500. So I'm still kind of hesitant on taking a live trade here with this. Just because you can see like my ability to detect when these things are going to turn is not so good. Anyways, yeah. So the discussion we were having earlier. So sometimes it's just really hard for me to know like what people don't know and like what I'm supposed to teach and stuff like that. But then on the same clip, it's like I can see in my kids, oh, you don't know this? Okay, sit down and we're going to teach this thing and we're going to teach this thing, right? So I'm very much like my kids are going to be financially literate. I think some people seem to think that being financially literate is like knowing how to file your taxes. Dude, filing your taxes early is easy. You just have to read the form. Right? I guess you know you wish they talked about it in school. Okay. Well, they talk about investing in school too. It's like a one-time lesson and you probably didn't take it very seriously, you know? So, but there's a lot of people out there that have these ideas. And then there's these other things like there's the deeper economics, right? Like, for instance, we know from economics that price controls tend not to work, right? Having a price floor and price ceiling on things that tends not to work. But for some reason, we have this large swath of Democrat voters out there. Yeah, I'm going to go into politics now, just in case there's anybody else out there that I can maybe deter from watching the stream today. I'll get political, right? Why if Democrats are the party of science, then why is it that they continue to push these policies that are directly contradict everything that we know from economics, right? Like yesterday, they tried to pass a law that would impose price controls on oil. It does not work. Your DOMs look really clear this AM as in pixels. Well, maybe you have, you know that you can view the stream in 1080p. I think that if you just use auto, it will probably tend to tell you to use a lower resolution. But if you specify the resolution and you use the full 1080p that we're sending out, it should, yeah, it should look pretty clear. You should be able to see the numbers and everything. Oil is moving higher again. Oh, you know what? So I noticed this yesterday too. Is like we've had this thing where like oil will move higher, equities will move higher, and treasuries will move down. And so sometimes I'm not sure if it's the equity correlation or if it's the correlation with oil. Man, this is so far the chart today looks almost exactly like it did yesterday. And you know what? Yesterday I made like $1. I had like 2 bad trades and 1 good trade, and it was a net $1. So if that's what it's going to be here today, I don't really want to take a trade. If I do take a trade, well, there's 285 again. Like here's the spot where I originally wanted to go, you know, short yields. So like here's the choice. Saudi Aramco is now NR1 in market cap. Yeah. It's a real problem. Like, yeah, wasn't much. I was really frustrated yesterday, I have to say. They the government's policies are just not helping. You know, like here's the thing: is that if with the thing that's going on in Russia, oil prices would be high. Okay. The oil prices would probably get over $100 a barrel anyways, right? But they were already moving that direction because of the administration's policies. And it's not just like because of the administration's policies. It's like every tiny thing that they've done has made oil higher. Like every policy that they've done. Like, how do you not go in there and say, oh, well, maybe they want the price of oil to be higher? But they say that they don't, and they say, well, it's all the fault of these evil oil companies. We need to implement price controls. And which brings me back to, okay, so if the Democrat Party is the party of science and follow the experts, then why do they continue to ignore the experts on this? All of a sudden, when it comes to economics, then we're into pseudoscience territory. Conspiracy theories. It's all the evil oil companies are doing this. It has nothing to do with. No, that's not. That's the economics of this is every policy that you've done is increased the price of oil, or is going to have the tendency to increase the price of oil. I mean, at least with the Republicans, my oil isn't $100 a barrel. Seriously. You say Biden turning out COVID checks was a mistake. Well, I think that COVID stimulus was a very necessary thing, but that we didn't have the science at the time to really know exactly how much stimulus was needed. I think that we have a much better idea of it. So I hope that if we have another crisis, that they'll be able to size their stimulus more appropriately. Because I don't think that the answer is you just don't have stimulus at all. Okay. We would be like in a depression right now if there was no stimulus at all. It's probably the truth on that one. But right now, yeah, I would rather have Republicans in. They have their own problems. But like here's the thing is that you can have this thing where it's like Republicans, Democrats, they go back and forth. There's good to have some balance. Then you should be able to get the good parts of these guys and the good parts of these guys. But what has basically happened is that the Democrats have gone so far south on a couple of issues that it's basically like it affects my daily life, right? Like, it's one thing if I have a strong opinion on abortion, for instance. Let's say that I have a really strong opinion on abortion, and so I always vote Republican because I'm super pro-life or whatever the deal is, right? Okay. So yeah, that's kind of that makes sense, okay? But then if I knew that electing Republicans was like going to destroy the economy and they were going to make all of the stupid economic decisions, right? And to the point that it starts to affect me in my daily life because the economy is so trash and my investments are going south and yada yada yada, then I'm not so inclined to vote for Republicans just because of that one issue, right? And that's what I think is going on here with the Democrat Party, is that they're basically disqualifying themselves because their economic policy is so terrible. And it's not like it's like, oh, well, they just have a philosophy about it that's a little bit different. No, it's that they believe all of this conspiracy theory nonsense that just directly contradicts everything that we know about economics. Let's just ask the rich to give us money. Stimulus fueled the inflation. That was, well, so kind of yes and no. I think it's more complicated than that, Tobias. So first of all, it's not just like that there was stimulus. How much stimulus there was is a really key factor. So we know from the inelastic market hypothesis, if you come in and you take $1 out of bonds and you buy stocks with it, that results in anywhere from a $5 to $9 increase in the aggregate market cap of the stock market. Okay. So basically what they're saying is if you were to come and say, okay, the economy is not doing so well, we need to put money into the stock market. How much money do we need to put into the stock market? And you would go in and say, we need the market cap to be X. And the average person would say, okay, so then we need X dollars to bring it up to that point. And what we basically found out was that the impact of $1 is 5 times higher than somebody would expect. So you did 5 times more stimulus than you needed. That's basically what happened, right? So if you're going to do stimulus, you probably don't need so much. Now, one of the things is that, when it was in the depths of COVID, that stimulus didn't have so much opportunity to create inflation in the early parts of the pandemic because like people were really hurting. And so it was really just kind of offsetting the costs of the pandemic, right? But when it went along and we were into 2021 and we were still doing stimulus, when large parts of the country were completely open, right? That's when I think it started to have that inflationary effect, right? And so the first two stimulus that they did under Trump probably were okay. But when Biden came into office and just absolutely insisted on doing a stimulus package of his own, that's where they went off the rails. So, I mean, I think that Trump set the stage for it, right? Like the reason that Biden wanted to do it was because Donald Trump had done it, right? But yeah, that it was Biden's stimulus, very unnecessary stimulus that I think really kind of made things bad. I think the other thing that really hurt was that they extended all of their moratoriums on everything. They extended their moratoriums on housing. They expend on like evictions. They increased the unemployment insurance longer than it should have been so that people could just continue to stay unemployed and make more money than when they were employed. And like my wife was in that situation and it was really nice when we had our baby. It wasn't so nice when she had to go back to work, So it really was like, yeah, the Biden administration took a bunch of policies that were okay and they like totally went ham with it. Right? But it wasn't I don't think it was just that, right? I don't think that you can blame it all on the stimulus, right? It was everything else that they did too. Okay, come in, moratorium on oil drilling, right? Start pissing off the Saudis. These sorts of things, you know? So it's just so weird. Like it seems that every decision that he's made has been bad. I don't see what's really going on here is this. These things that I'm talking about where it's like why don't they actually follow the science? Well, listen, the smart people in the Democrat Party, they know these things, right? But they also know what their people want to hear. And so they just tell their people what they want to hear in order to get elected. And then they go, oops, we can't actually do that thing. It's just the Republicans. I'm telling you, there's people some people, they get into Congress and they realize that what they wanted to do isn't very practical. That happens a lot. But there's a lot of people out there that they just know that this is the way the game is played. Go and tell your audience one thing and then, just kind of do enough to placate them when you're in office, but you never have any real intention of doing that thing because you know that it's not actually possible or it would even be a good thing if you could do it, right? That happens. So what's happening in the Democrat Party now is that they've been telling their voters this stuff now for like 12 years, and they're finally starting to get people in office that actually believe it. Now, Biden is not one of those people that actually believe it. I personally believe that Biden doesn't actually believe anything. Instead, Biden does what his advisors tell him to, and all of his advisors believe it. And so you ended up with a policy in Washington that was very, very ideological and completely ignored economic reality over and over and over again. What is so good about him is that he's the lesser of two evils, that you favored him over Trump, I guess. He is too old. I agree. I really don't think we should have people so old in office. Like, there's a certain point at which the experience that you have because you're so old doesn't make up for the intelligence that you're losing because you're so old and your mind isn't as quick. And Biden is very clearly over that threshold. Oh, sorry, that was a question. What is so good about? I didn't vote for him. Don't ask me. I feel that the Republican decisions are driven by a lot of religion. I don't know if that's so good, to be honest, but I am not an expert on U.S. politics. Well, so that's an interesting subject, Tobias, because I think that some of that may just be narrative. So there's this whole thing, okay? Like, I think to understand this, if you're not in the U.S., where do you live? By the way, that might help a little bit, but I think to understand this, you have to go back like way further. You have to go back way further. Oh, you're in Germany. Okay. Oh, wait, what's this in Discord? Somebody just posted something huge in Discord. Oh, this guy's asking a question. Frank should come in here. Hold on. Let's give him a link here. Copy that. Okay, I'll answer your question first. Tony's, or sorry, what was it? Tobias's question here first. Okay, so you got to understand the history about this. Okay, so really, I think you have to go back to JFK. Okay, so there was a long line of Democrat presidents after World War II. The Democrat Party did very well after World War II, and then you got to Kennedy. Now Kennedy was a little bit different from some of the other Democrats, but he's really kind of the most universally loved Democrat in America, right? And but the thing is that JFK kind of started the Vietnam War. Right. So you had this whole thing going on during that period of politics where it was all about the Vietnam War. JFK died. LBJ took over, really like accelerated the Vietnam War, and it didn't go very well for him. And so then people eventually got sick of it and put Nixon in. And Nixon basically was all about like ending the Vietnam War. And essentially he did end the Vietnam War, although like he escalated it first. And there's all this stuff. And then he got impeached, right? So then you come into Jimmy Carter was after that, right? How did it go? Nixon, Carter, and then Reagan, right? Okay. So then you had Jimmy Carter, and Jimmy Carter was like here's all of these liberal policies that, we told you aren't going to work, and they didn't work very well. And that was like when you got the whole inflation, stagflation and all of that sort of thing. Okay. So in enters Ronald Reagan. Now, Ronald Reagan is a traditional conservative to large extent, although he came from California. So he's not like a Southern conservative. He's a Californian conservative, but it's still like social conservative, economic conservative, and foreign policy conservative to some extent, right? But the big thing that he did was he came in and he said, well, what Jimmy Carter has been doing is stupid. We need to enable markets. And so they made some changes that really enabled markets. Like, there's not a mistake. It wasn't just by happenstance that the stock market started to become like a really big thing in the 80s. It was some of the things that the Reagan administration did that enabled that. Okay. He also did some other things that Democrats don't like, but that's not really pertinent to what we have going on. That was Reagan, right? Okay. And then you had Bush, who kind of was, Reagan's vice president. He came in and he screwed it up. People didn't like him, right? Then you had Clinton, okay? And Clinton kind of wanted to be a liberal at first, but it didn't work out, and so he compromised. And as opposed to like Obama and Biden, when he realized that he couldn't get any of his agenda done, instead of saying, well, then I'm just not going to do anything, he said, okay, well, I'm going to pass all of the stuff that we can pass, and that'll look good. And it did, and worked really well for Bill Clinton, right? But then you got Bush, okay? And this is where this is the real context to pay attention to, is that a large part of Bush and his ability to beat Al Gore when he ran was because of the support of evangelical Christians. Evangelical Christians liked Reagan. It wasn't that Reagan like specifically marketed to those people. They liked his policies. So when Bush came along, they made like the conscious choice to run like a Christian campaign. And that's when the religion became really intertwined with the Republican Party. And so this is why you hear all, a complaint from Democrats that Republicans want to impose a theocracy in the United States, which is just absolutely ridiculous. But that's where that comes from. This is an idea that originated when people were arguing about George Bush. Okay. Then we had Obama. Okay. And during Obama, a lot of things changed. Okay. And in particular, the conservatives lost on a large number of social issues. It was like these issues were becoming kind of going against them anyways. And then Obama would implement a policy and like the public, especially on gay marriage, right? And kind of what happened in the conservative sphere was they started to get into this realization that like all we do is lose. Like, what the heck? We're sitting here, we're holding to our principles, especially when it was like they ran against Obama with Mitt Romney, because most of those conservatives, those religious conservatives, they didn't like Mitt Romney because he was Mormon, right? So they kind of said, oh, well, Mitt Romney is the most electable guy, so we'll go with him. John McCain is the most electable guy, so we'll go with him. And they kind of found that they were just losing over and over, and that like holding to their principles wasn't working because the other side didn't give a crap about that. The Democrat Party was starting to move at post Obama. You started to get into this woke stuff started to happen towards the end of Obama's term, right? And then it turned into, we're going to just do whatever just to have the power, because it doesn't matter. If you don't have the power to change things and make policy changes, then none of this other stuff worked. And the conservatives saw that, and it was working. So when Donald Trump came along, the kind of the overwhelming feeling in the conservative movement was, we just want to win, and I don't care how moral Donald Trump is, if he seems like he's slept around and stuff, because the Christian right would not vote for Donald Trump because, he's an adulterer, right? Well, essentially what happened was post-Obama, the Republican Party stopped caring about social issues. They said, the social issues haven't helped us. Although it's kind of funny that it's coming back, but it's not in a religious context this time. Now it's like, well, this kind of woke stuff is not good for people, right? And it's not good for society, and they've been fighting against it because of that. So I think the reality here is that the current Republican Party, at least the people in power, are very much driven primarily by foreign policy and economics, and that they only talk about the social issues in as much as they need to keep the evangelical right? So that's why I said what I said. Okay, so now to Frank's questions, because Frank asked a couple of questions that we do cover here many times. Okay, so first of all, you have Jigsaw Day Trader. If you have Jigsaw Day Trader, I would highly recommend that you start out watching ZBZFCN, yes, and place your trades in ZN. So here's why. ZN has the most liquidity, the most order flow. And the more order flow there is in an instrument, the more predictive signals there are available. This is an empirical result that's been found in many studies and has confounded people for a long time. Like, why is it easier for us to predict the largest stocks? But the reality is that the larger that it is, the more frequently that certain funds and so forth are going to come in and do stuff in it that create regular patterns in it. So you don't want to look for. So when I say patterns, I'm not saying like when it moves up and then down and it creates a lower high, ignore that stuff. Okay. But patterns like on the first day of the month, it tends to move up. Yes. That's, seasonality patterns, right? Because on the first day of the month, the treasury tends to move up because all of the people that sell bonds get all of their inventory at the beginning of the month. So they have to buy at that time. And that's why there's more buying at the beginning of the month. There's things with the options, right? We tend to get pegged into certain strikes with the options, okay? Because delta hedgers are like a huge source of volume in the market, okay? So that's why I would put my trades in ZN. They're going to be a little bit easier to move around. Plus, the ZN is really slow. It's less money. So it's just a good place to start. And the treasuries overall are a good place to start because they teach you better, right? They're going to teach you all of the economic stuff, like how do the markets respond to certain pieces of economic news, right? That's all stuff, like you learn about every part of the economic system from trading the bonds. So then when you turn around and you go and try and trade something else like the ES, you're going to be a lot better prepared. So that's where I would start. And like, you have to do it forever. Like, but I would just do it, at the very least for a month. If you really want to go and trade SPOOs, then you can go do something else, right? But trade ZN at least for a month, okay? And I wouldn't expect to be like profitable from doing it in a month because like the thing is, markets tend to be more statistically efficient than they are informationally efficient, right? So the thing that you've got to learn is you've got to learn about the market. You got to learn like, how does the treasury business work? What are the different kinds of players that come in and do stuff, and why do they do stuff? Because essentially what we're trying to do is we're trying to predict what those big guys are going to do in certain situations. That makes sense, Frank? So you follow the ZN, okay? Now I have a bunch of videos about order flow. So I have a series, and if you watch that series, also you have Jigsaw. So Jigsaw comes with some education, even if you bought the basic package, right? So I would watch all of that education and watch my thing. At that point, you should be to the point where you at least understand what you're looking at, okay? You might not be able to predict what's going to happen, but you at least understand what happened. That's the first place that you got to get to, right? Then it comes down into predicting what's going to happen, okay? So this is the last video in my order flow series where we talk about stylized behavior of markets, and that's more about predicting what's going to happen. And the thing is that I can't come in here and say, okay, when X happens, it's likely that it's going to move up next. They're just edges like that. It's not that they're not possible to happen. It's just the market is very statistically efficient. Those get arbitraged out of the market very easily. So it's usually something more complicated than that. Okay. But there are some things that, like if for instance, I know that somebody is going to come in and buy 10,000 contracts on the day, like some sovereign wealth fund or whatever the deal is. Let's just say that I've been given information that I shouldn't have, and I know that they're executing that order today, right? I can tell you like almost exactly how it's going to play out. And that's the stylized behavior of markets. As they buy it in waves. It's going to move up, and then at a certain point, they're going to kind of create a liquidity hole, an area where there's not very much resting liquidity. Actually, I think you can kind of see it right now in the treasury where the bids and offers are kind of canceling very easily, and it's going back and forth across this price at 22 a lot. That's like a liquidity hole, right? So they will make a push until they get a liquidity hole, and then they'll slow down how much volume they're putting in. They'll still be executing back and forth in here, okay? But it's a slower trickle. But because it will stay in that place for such a long period of time, they actually end up executing more volume in those areas, right? And then after about 45 minutes or so, they'll make another move, right? So you see what I'm saying? Where it's like, I can't look at the market action and predict what the next market action is going to be. It's not that it's not possible. It's just they're hard to find. I don't necessarily have that. And I don't find searching for those to be very productive. But if you have another piece of information, a piece of fundamental information that suggests that a certain type of order will be executed that day, then you can predict almost exactly how it's going to play out, right? So that's why you want to learn about the market, right? You want to learn, how does this market function? You want to read everything you can, like go on the CME website, watch their videos about the treasury market and how that all works, right? The more that you learn about that stuff, those are going to be the things that are going to give you the opportunity to come in and say, okay, today we're likely to see buying because they're hedging against X economic macro factor. Today we're likely to move down because this is the way that the options gamma is pointing. That sort of a thing, right? And that's where we go. So I've been working hard. I've got like all the stuff on the channel to help you get started, right? Okay, there was another question that you asked. So, are you on a good trading path? Yeah, I mean, what you're doing is the same path that I took. Although I have to say, to get to the point that I am now, it took me about 5 years. And with the videos that I'm giving you, and like, here's the thing, is like, you know, you watch a video, but are they actually telling you something, right? Well, everything that I'm teaching you is based on quantitative finance research, like proven studies and stuff that you can go and read these studies and the books, okay? So you know that these things actually work. And I'm basically saving you, like, I'm accelerating your learning by like 5 years so that you really understand. Yeah, the videos are here on the channel. Okay. Now, the other thing that you asked, though, was, is order flow scalping here to stay, or will it be completely obsolete in the near future? So I think that a lot of people misunderstand what order flow scalping today is. And the reason is because order flow scalping as it was practiced in the early 2000s is already basically dead. So there was a time where you could make money just trying to catch the edge. Like, if there's not very much volume right there, I can buy it. And now I'm long 23 with 200 bid. I can have my offer at 23 half. And if they start hitting into 23, I just bail. Okay, there you go. I filled. I made one tick, right? There's a lot of people that's all you had to do. And they were making money doing just that. But then all of these robots came in and you couldn't get as good of a spot in line, and it was a lot harder, right? So that kind of order flow scalping kind of went away. But like, people didn't realize that they were kind of in denial. But that doesn't mean that the DOM is useless, right? Because the DOM is the only way to really see and understand what happened, right? So it comes back to this thing. The DOM doesn't necessarily tell me what's going to happen, but it tells me what's happening. So if I have an expectation about something that's going to happen, the only way for me to really know if that thing is happening or not is for me to watch the DOM and understand the DOM. And if you do have a good expectation about what's going to happen and you're correct about in that, if you have that first part right, then you can use the DOM to get a more efficient entry, yes. Because you can use the empirical properties of the stylized behavior of markets to time your trade correctly and pick a good price and all of that stuff, right? So I think I answered all that. I think that was everything that you asked. Cool. I feel like as long as trading is a thing, order flow isn't going anywhere. It's what moves price. All charts and indicators are extrapolating information from the order book. Yeah, exactly. All charts and indicators are basically just summaries of what the order flow is doing. Yes, and most of the time, they're omitting some of the most important information, because one of the most important pieces of information is, what did the orders do at each individual price, right? See, like this flickering back and forth here at 24, that's something that I pay attention to. As I can see market makers aren't necessarily so excited to like really bid it up or down at this spot. Yeah, makes sense because that's where the most of the volume is traded for the session. Okay. Now, it could move up or down based on a correlation. I know S&P 500 is cratering, but the treasuries aren't really seeing the bid. So I think that correlation that we were looking for is maybe not so strong. It looks like the oil is coming down. So maybe the oil correlation is stronger here today. So I'm just trying to read into why did we move up 4 ticks from where we were. And I'm kind of looking at correlations. The dollar is definitely moving. So dollar's an important correlation to watch. Right. But again, don't fall into the technical analysis fallacy. I simply do not believe in technical analysis as it is practiced and taught. I do not believe that past data is very effective at predicting future data. That is past exchange data is not very good at predicting future data. Oh, I heard the sound and I thought it was maybe the baby crying or something, but it was actually one of his toys. It's actually one of his toys. Understood. Yeah. I mean, like, here's the thing is that like a statistical edge can exist, but again, they're very hard to find. And one of the problems is, man, now that's distracting me. I'm listening to that sound. And one of the other problems is that we very often just don't have a big enough data set. Like one of the things that I would do is I'd be like, okay, let's watch a phenomenon that I've seen in the order book for like 2 weeks and see how it works. And I'd get like 40 trades and see some sort of statistical aberration in it and think that, okay, so I can just always trade that. But that's not good enough. You need years of data. And usually with order flow, the amount of data that you would need to really know if it's like really a good strategy is more data than you have, right? So it's kind of hard to just trade off of just the technicals, right? But that's where I'm saying like the market is way more statistically efficient than it is informationally efficient. Current price reflects mostly the orders going through, just like what you said. The orders are what moves it, right? There are people out there that place orders because of their changing expectations of the future based on fundamentals and so forth. It's just that from the evidence that we have, they're like a really teeny tiny force in the market. So they're not what moves things. So if you can find a situation where the market has mispriced something and you can identify a catalyst event that will create orders and cause the market to come more back into in line with that piece of information, that's when you have a great trade, right? Are you referring to market order flow or down order flow or both? I'm talking about the whole thing. Although I do think that what the market orders are doing and how price responds to that is more important. Can I have the same settings as you on Jigsaw with the, yeah. So there is absolutely no difference in the software itself between the different Jigsaw packages. The only difference between the Jigsaw packages is the education that you have available. Okay. And I started with the basic package. Like really most people should just be doing the independent package. If you have the money, you know, it's not like the education is useless or anything like that. It's just, you know, you can pay for the education in blood, sweat, and tears instead, like I did. We want to start with no BS. Oh, I think that, well, so again, like the webinar is interesting because that's you just sit and watch him trade for 2 weeks, and he's a good trader. He trades a little different from me. Maybe it's better, maybe it's not. I don't know enough about his long-term performance to know. I do know that I tried using his setups in the beginning and I didn't really have success with it because kind of what I found that they're good setups, but again, what I found is they don't predict the future. You have to know what's going to happen first, and then you know what to look for, right? Um, but his basic course, his $90 basic course, is absolutely my favorite thing ever. I love that book. It's so like nothing else really describes the game that's going on under the surface here like that no BS day trading book does. Nothing comes even close. So I really like that book, and I think it's worth the, it's not a huge book, but I think it's absolutely worth every penny. But the $6,000 webinar is, that's up to you. If you have that much money, then go for it. But I never used that. Do you prefer trading futures more than equities? Well, yes, but okay. So the big thing about futures is that you can risk less, right? Like you see, I'm coming in here and trading micro treasury contracts and making or losing maybe $10 a day. Like a really bad day will be $100 for me. Okay. And that has to be like a 3 sigma day move in the treasuries for that to happen. Although we've been having a lot of those lately. Could have made $100 yesterday if I had stayed in a trade. Or not yesterday, the day before that, Wednesday. So yes, there are things that I like about treasuries. I think that the game that you're playing here in the treasuries is a much more fair game. Okay. But there is more opportunity in stocks. There really is. There is more opportunities to find an informational and asymmetry, but it's a completely different kind of game too. Like you're doing different sort of things. You're like, how do you research all of the companies and figure out which sorts of companies are going to be moving that day, and how do you pick your stock? But then you can go in and if you get to pick the instrument that you're trading every day, and you always get something that's in a strong uptrend or whatever the deal is, right? That helps a lot, right? And not only that, but stocks is not a zero-sum game the way that treasuries do. It is kind of a zero-sum game on like a short-term basis, but generally speaking, I think that especially if you swing trade, you have a better chance of making money in stocks. Like you might not have an edge in stocks, but you'll still make money. Whereas in futures, if you don't have an edge, you can lose everything that you put into it. Okay, so that's why I trade futures. I enjoy it, but I think you have to consider that there are opportunities in equities. It's just that you have to have a lot more money to really be competitive in that game, right? I don't know, guys. So I kind of been watching that 2.85 price to think maybe I would take a trade, and I was preferring the short. And at one point I was like, well, maybe I could do it here. But I still don't, it still kind of seems uncertain to me. And so it moved up. And I was like, okay, well, that was good. I really just don't know what's happening. And so then I kind of gave up on it. Now we've come back and we're doing this on the other side. So it's not like that price was a terrible price or anything like that. But I'm not entirely sure. The S&P 500 doesn't look so hot. There's certainly quite a bit further down to go before it starts to get crazy over there, though. So I don't know if that means that we could still sell it here in the micros and make money or not. But I think at this point, I tend not to do very well on Fridays. Order flow can do some weird things on Fridays as people are closing out positions, and especially on options expiration and everything. So I think that it's still probably better for me to just hold back a little bit and save my capital for another day, unless I get something really obvious. By the way, I forgot about the consumer confidence, but that came in line. So I don't know. No, you're talking about the ebook. Yeah. Yep, the ebook is good. Like here's the thing with the education is that every piece of education that I took the No BS course and I took the Jigsaw materials, and I thought that those were all really good. But at the same time, I probably learned more from reading the Trades, Quotes, and Prices Markets Under the Microscope book, and then starting to read quantitative finance research papers. I learned way more from that, and I learned things that none of these research papers ever knew about. So, you know what I mean? There's no substitute for going in and just doing the research yourself. Doesn't mean that those courses aren't worth the money. It just means there's more for you to do. The MES or ES order flow moves so fast, not sure how one can extract any information from that and trade successfully. I hear you, Frank. Well, you know what? When you're watching it day after day, you do kind of start to kind of get an idea for the pace. Although I feel that in the ES, like the pace of it is a lot more important. So on my video about the stylized behavior of markets, that has the book in it, but it's called Trades, Quotes, and Prices, Markets Under the Microscope. Okay, that is the dog crying. I'm going to go and let him out, okay? Okay. Anyways, man, now I sit down and my headphones don't sound right to me. No, I think we're okay. So it looks like the SPOOs took a little bit further dive, but they're not below 3,900 yet. And the treasuries are another 4 ticks up. Oh, and but the 10-year has not moved. Okay, so the 30-year, we're getting steepening. The 5-year is going more than the 30, and we're getting steepening. That's why this micro hasn't moved as much. Feel like today is going to be another one of those big sell days, and it's kind of starting to set up that way, don't you think? That's just kind of like my feel for it, is that it kind of feels like that they're going to go for, you know, the sellers are just going to push as much as they can today. I feel like a sell is kind of looking a little better here. The treasuries may come up and breach new highs. I think that I'd want to get the right price. Still, at least this seems like an opportunity where I might be able to get a good price if I do it. So there was another thing that I was going to say was with the ES order flow moving too fast. Um, I don't think I can go too much into it right now, but there is a feature that's going to be coming out in Jigsaw that helps with that. So keep an eye out for it. There is a feature in development that I think helps with that. And especially with NQ. Oh my gosh, NQ is just nuts. Yeah, that's what I'm here for. Yeah, well, okay. I'm thinking now 284. Oh, there's the wife and child finally coming downstairs. Good. Because I let the dog outside and he might want back in. I must be dehydrated because my lips are super chapped today. Maybe that's why I had a hard time sleeping, was because I didn't drink enough. Like, I got in bed at a pretty good time, but I woke up like 50 times. So there it is again. So one of the things that's making me a little weary about this price is that I've seen a lot of volume trade at both 28 and 27 half throughout the session, but you're not seeing it trade here at the moment. So I'm a little worried that they could do like some kind of false starts and then break down here and then move up higher. I don't know. Timing here is a little weird. The dollar is coming back. The dollar saw a rise there, but it's coming back. Let me come through here on Twitter. Let's see if there's anything that I missed. After your day job? Hey, good luck. Same here. I usually end the stream at 9 because that's when I gotta go do my day job. It's good now because I don't have to drive, because it used to be 8:30 because I'd have to drive into work, but now that I don't have to do that, it's a lot easier. But I don't know. I think that the day may come in the future where I may have to just not stream anymore. It might happen. If I get a different job, perhaps. Especially if I went back and worked in the finance industry. Yeah, not too much on Twitter this morning. Let's check out Zero Hedge. See, that is it. You see what happened there in the treasury is exactly what I thought, was worried about. I wasn't necessarily making a prediction. I knew enough about the liquidity that it was possible, right? For me to be buying here, I've got to be really certain that the indexes are going to like crash and stuff. Well, that does seem to be associated with the S&P 500 turning up a little bit here and making a higher high, so that might be part of why it is. Can a CFA, you mean a certified finance accountant? Because I have some science background. What does CFA stand for? Because I think that could be a couple of different things. Musk challenges sexual harassment accuser to describe part of his body. Good grief. Acceptance. Traders position for lower stock prices as 1.9 trillion options expiration looms. Yeah, chart out. No, there's a lot of technical analysis that is taught in the Chartered Financial Analyst program that is really still just complete nonsense. The way that certifications in the finance industry work is kind of weird. So I've been studying for a Series 65. I have to say, if you do not feel like you know very much about the finance industry and you want a really good primer that kind of tells you everything that you need to know about the finance industry, the Series 65 is the place to start, man. That just gives you all of the base level understanding about investment products and regulations that you need to have. It's not more serious like the Series 7. Then the Series 7 is really a lot, but large offer at 27.5. So every time that we've seen large orders today, it's kind of ended up being, so it pulled. They weren't necessarily the best opportunities, so. Every CFA holder I know is a failed trader, no exception, like not one of them is even at break even. Well, I don't think that a CFA is intended to be for a trading. I think that it's more to be like a portfolio manager. And I am told that on average, portfolio managers with the CFA tend to do better, but so one of the things, the reason why I say what I do about the chartered financial analyst or whatever is because, I'm very anti-technical analysis because the empirical evidence just suggests that it doesn't work, or at least that the methods that retail traders are always promoting don't work. And one of the arguments that will come up is people will say, well, if technical analysis doesn't work, then why do they include it in the CFA? Right. Well, they include it in the CFA because technical analysis is popular and they can teach it and they can make money from you teaching it. But there's the empirical evidence does not support these methods. Okay. Maybe it's good to get a leg in the door. Sure. Well, I'm wondering, I need to study better for the Series 65. I haven't done very much since I read the book, but I'm going to be doing a lot more when the baby is born, I think. Probably should have been doing it some this week, but I got so absorbed in making a song that you kind of forgot what I was doing. Today, I think we're going to write more about the options gamma. I think I'm going to try and make that video this weekend. We'll see if I can get it done. Anyways. Yeah, but I hoping that I get my Series 65. Maybe that will open some doors. I don't know. I'm not getting it because I think it's going to open doors. I'm getting it because at some point I want to invest in hedge funds. But well, not sure if you've stumbled upon the SMB Capital videos or the equity. So I'm familiar with the channel. I don't watch it a whole ton. So my position on this sort of a thing is that you should follow experts, not gurus. Okay, so a guru's authority is based on their past performance, but an expert's authority is based on an understanding of the facts. Right? An expert can explain to you how we know these things. They can show you the data or the studies that proved that these things are like real market phenomenons or whatever the deal is, right? Whereas a guru supposedly made money, you can't really verify that. And there's no way for you to know if what he's teaching is actually the reason that he made money or if it still works or anything of that nature, right? There's no empirical evidence. So if I'm watching a video, and this is the case with most YouTube videos, as they say, here's this strategy that we use and we really like, and I just ignore it because how do I know that it actually works? If you don't provide any empirical evidence, that or it's just like psychology junk. That's the other one that drives me nuts. Is a lot of stuff is kind of like no brainer. Like, oh yeah, if anybody that's been trading kind of knows that that tends to happen to you, right? So I'm not so interested in those videos, but that's why I don't watch a lot of other YouTube channels, to be honest, on finance, because it's mostly trash. Like there's just so much financial junk food out there. Not saying that their videos are trash, but trust me, bro, I won't lie to you. Okay. Dude, there was somebody on it's kind of funny. Like I have to remember that not everybody that comes onto the stream is a regular viewer, although we have a very, very consistent and dedicated audience of about a dozen to 24 viewers that are here every day. But every day there are also people that have never listened before, so they don't know that this is my approach. And not everybody that watches the YouTube channel or watches the TikTok understands this stuff. So we get somebody made a comment on the YouTube yesterday that was like, well, but I made money from doing this X thing. And I'm like, great, then prove it. Show us 5 years worth of trade history and then prove to us that your profits were actually derived from the strategy, that you're actually trading the strategy that you claim that you are. Well, you know, like you have to explain, this is how it works. Maybe we automate it, and then we show that the automated entries match pretty closely to the trades that you actually took, and yada, yada, yada. You think that he'll respond back? He might. He says that he's been trading for 10 years. So maybe this guy will come in and give us his statements. Although I think what you might find is that there are some people out there that have been making money for a long time, but it's not actually a good risk-adjusted return. That happens a lot, especially with swing traders. It's a lot easier to make money if your time horizon is longer, but your risk-adjusted returns aren't as good. Let's see here. Where was I? Oh, that's interesting. President Biden endorsed a cutting-edge plant in the Republic of Korea that makes some of the most advanced semiconductor chips in the world. Thanks to the investment that Samsung is making, the United States will have a facility like this one in Texas, creating 3,000 good-paying jobs. Good. I think we need to get more microprocessing chip plants in the United States because I'm kind of getting concerned about China. Yeah. Anyways. I wish that I had, if let's say that this channel was, if I, became the next Meet Kevin by chance or something. I don't know. I kind of still feel that there's things I'm doing wrong on my channel or skills that, my content is just not to the tier. And more so than that, just doesn't have the broad enough appeal yet. I mean, I've done all of the trading, the quantitative analysis sort of the stuff. It's because that's the stuff that I know for you guys as traders, you're the most important, right? And working together. Because I don't just do this just because I'm so smart and I want everybody to know how smart I am and I put it on the channel. No, I put it in there because I want to get you guys to the same point that I am so that you can help me make better trades, right? That's why we do it. And now that we've done most of that, and I have 2 or 3 videos still that I want to do on that, then we can try and broaden our appeal, right? And grow the channel to get it bigger. Looking forward to your educational stuff. Good. Yeah. I think I want to do a video on options gamma. That's going to be an important video. That's probably the biggest piece of information that we talk about here on the stream all the time that I don't have a video about. So what would differ if prices were determined by random generated processes with a set high and low? Okay, well, so first of all, if it was a Poisson process, is that what we call it? That's not a Hawkes process. No. It's I forget what they call it. It's the one where that's largely mean reverting. Okay, so first of all, that's not what the market does. It's actually really interesting. So Ish, what you're asking is really you should go and watch the stylized behavior of markets video. It's basically what did I use for the thumbnail on that one? I forget. So it was the last order flow video. But that basically answers that question. But I'll answer it for you here, like more generally, right? Okay. So first of all, the most obvious one is clustering behaviors. So orders tend to cluster together, and volatility tends to cluster, and that is something that is different from if it was just random. Okay. And you can kind of take advantage of that. So like, I think that something that I fell into the trap of doing a lot in the beginning was like, I would wait until I saw some sort of signal in the order book. So when I saw something that I thought was weird, then I would determine what I thought that meant and I would take a trade. And what almost always tended to happen is like I would end up getting in at exactly the wrong spot. Like that's where it pivoted or whatever, or I would end up stuck in something forever, right? It's actually better. No, not a Vasicek. Vasicek. That the Vasicek is wait, am I saying that right? Vasicek is a model for the treasuries that is kind of mean reverting. But no, there's a type of process that is basically it's a random walk that is mean reverting. I forget what it's called, but they tend to use those models for like studies on what is the optimal take profit and stop strategy in a spread trade. But I forget what the process is called. No, it's not a Monte Carlo simulation either. Anyways, man, so I was sitting there, I was thinking, well, okay, now that we're up to 845, I'm still a little skeptical about it. Maybe I could get, if I'm patient, they'll give me 2.85 and the S&P 500 could still decline, but the treasury has been going sideways now. So that there could be a change after 9:30. You got to remember, we got to keep in mind that the European session closes at 9:30 our time. So there could be some movement going into that and after that. But does not look like this is a very good timing for a trade, does it? Anyways, so the clustering is one thing. But the other thing is that that is different from random is that the markets are inelastic. That's a much bigger thing. Now treasuries are mean reverting over the long run, okay? But prices on an intraday basis are not mean reverting. Everybody thinks it's all about support and resistance, but this inelastic market hypothesis study that came out last October, and I also have a video about, I think really calls that whole kind of thinking in traders' minds into question. Oh, hold on a second. I gotta get going soon. It's gonna be time for work in 10 minutes anyways. I'm in the Mountain West time zone. I live in Utah. So So the Utah is just the perfect time for to wake up early and trade the markets. I think I'm quite lucky in that respect. You know, if I was in the Eastern time zone, wouldn't be able to do it. Oh yeah. Anyways, so the thing is that the effects of large meta orders, they just push markets really far. And I'm not in the finance. I was. So my story is this. You want my like the story of Seth's life? I always wanted to make video games. That's what I wanted to do as a kid. I knew from the time I was like 12, oh, I want to make video games. When I got into high school, I finally got to, like, I had a calculator and I learned how to program on the calculator. I was like, that's so great. I can make games on the calculator. I want to make 3D games. So I go to university to make 3D games. And kind of there was, well, for one thing, 3D programming is kind of a little pedantic sometimes. Like, it's one of those things, so you have to like set the renderer up correctly. You have to get like every teeny little piece of it set up correctly and then run the render. And that's can be really frustrating programming. But I remember I was at school and people were talking about how demanding the video game industry was, and that it wasn't really actually a very good industry to work in. And these Zynga guys, when Farmville was the big thing, they came to recruit for interns, and they basically wanted to pay you like minimum wage and had these just absolutely insane experience requirements for you that I thought were just absolutely ridiculous. And I was like, this is not the industry to be in. They do not treat you very well. And at the time, the 2008 crisis was happening, and I had gotten super into the stock market because of the 2008 crisis. And so I said, well, I should go and work in the finance industry. So I went and I got an interview, and just so happened that one of the big banks had a pretty sizable technology and operations hub here in Salt Lake City. And so I went and I worked there for 6 years. So I worked for one of the prime brokers in their equities trading technology division for 6 years. Eventually they really changed what they did here in Salt Lake. So I felt bad at the time of being let go, but in the end it was really the best, because what they do in there now is not the same, even remotely close to the same thing anyways. Now what they're doing here is they're making the bank app, right, which I'm not as interested in. It looks like I missed the opportunity, man. You know what? I don't like taking trades after 8:30, but I probably should have taken that one. The ones before that, I was kind of giving myself all the reasons to not do it. I think that I kind of came in here with the idea that I want to trade because it's Friday, but I think I should have taken that one and made the $10. 10, 15 bucks. I might have been able to get 845 if I'd really wanted to. Anyways, after that, I worked for like a healthcare exchange now. And I keep ended up doing weird things. I don't know if the path that I've taken has been the best for like career per se, because like I started out as a developer and then I was like a QA developer, and now I'm a site reliability engineering developer. It's like, now you can make a lot of money with site reliability engineering and everything, but I want to go back into quantitative finance. I mean, when I was at the bank, I was doing execution, like, exchange connectivity and testing those systems, that sort of thing. I would like to get into the quantitative finance side of things. I find that stuff so interesting. Is it true that one of the big banks holds the government's sacks in its hands? No. So here's the thing that you got to understand about the financial industry, that I think that people on the internet get wrong. Man, they're going to go, I'm going to regret not taking this one. But the S&P 500 looks just poised to bust through 3,900 and fall apart here. Okay. finance is a really complicated subject. That's the thing that people don't understand, right? You can get PhDs in finance, okay? There is so much to know. It's not simple stuff. There's math. It's hard. And the financial system is incredibly complicated. And by necessity, you know, we have financial innovation. It's made the financial industry better. Uh, the economy is better now than it was 50 years ago because of the innovations that we've made and everything. But it's also, with that comes complexity. And I think that people expect to be able to just understand this stuff with like a weekend of reading, and it's just not the case. This is stuff that you spend your lifetime learning, you know? So when it comes to government policy, the reality is that the only people that really understand the effects of government policy on the financial industry are the people in the financial industry. So people on the Senate Banking Committee, they have to listen to the people in the finance industry. They do. So that's kind of why it's like that. Well, I am ending a little bit earlier than usual, but I am gonna have to end it here. You guys had some great questions, so we're here every day. So just come back on Monday. I will see you then. In the meantime, stay profitable, friends, or at least don't lose it all.